Good morning and welcome to the Coinbase Institutional Markets call. It's another Tuesday, which means it's another call, another time for our experts to update you on what's going on in crypto. Today's call was recorded on Tuesday 31st, so please keep that in mind if you're watching it later in the week. So today I'm joined by George Toropov and Greg Sutton, two senior CES sales traders, David Duong, our head of institutional research, and Sid Shakar, one of our resident DeFi wizards and also a senior blockchain manager here at Coinbase. So to our agenda, we are going to kick off with a market update from George, running through what's been going on in the crypto markets. We've got a huge macro week ahead. So David's going to run through what to look out for there, both from a Fed perspective and other central banks, as well as from an earnings perspective. There's a ton going on there. So expect that to lead the week's price action. And then we're going to run across to Greg to run through some trade flows, what we're seeing on the desk in anticipation of that big week. And then lastly, we're going to run through some DeFi and Web3 with Sid to see what's going on in that space. We've seen some node failures, a lot of news on stable coins, so a lot to run through there as well. But without further ado, George, over to you. What is going on in crypto this week?
Thank you, Ben, and happy Tuesday, everyone. So looking at the price section, the market really spent most of the last week consolidating. Slight upward move across the majors over the weekend. And it was interesting to see that this was actually happening in a really low liquidity environment. It almost looked like, BTC, we were going to fly straight to 25K. But then actually yesterday on Monday, we have retraced all of that move back. Looking at the technicals in BTC, I think the bearish divergence I mentioned in last week's call on the daily chart is still very much on the radar. But having said that, I think if equities and the Fed this week don't spoil the party, then, we might as well see 25K in BTC in the near term. But looking over to derivatives, a couple of interesting bits there. So if you look at OI changes in options specifically, then there were quite a few changes for the 3rd of Feb expiries, namely 21.5 and 22.5K puts, open interest increasing in those quite a bit. And if you look at calls, it was mainly 24, 25, and 26K calls. So I think it's pretty clear that this is just after the Fed. So it could be, I guess a directional play on the one hand, but then the other option would be obviously that this could be some kind of vol play, potentially someone buying strangles to go long vol over the Fed, because as we all know, obviously, volatility tends to increase on the days of the Fed and immediately thereafter. And one other fun fact, actually, regarding Bitcoin, in Nigeria, because the government is trying to go fully cashless and actually has limited ATM withdrawals for their citizens to just $44 per day. Bitcoin on one of the local exchanges was trading up to 38,000 US dollars. So it's a massive premium compared to the global market.
Wow. And is there much volume going through at that level, or is it kind of lots of retail using kind of very, very small amounts? And are other exchanges across Africa trading at similar premiums?
No, I think this is specifically a Nigerian case, and I don't think that the volumes were pretty big there. So it does seem to be more retail driven. But it's also, but it's not the first time that this is happening. I think the last time was in 2021, if my memory serves me right, when the government there said that regulated financial institutions can't work with crypto providers, and then it also spiked. So I guess it's kind of part of the appeal that Bitcoin has in countries with, let's say, unstable inflationary regimes and unstable currencies.
Got it. That makes sense. And I want to come back to your comment around BTC at 25K. I think we'll have a lot to discuss there in the macro section of whether or not the market is kind of pricing kind of the Fed to protect perfection in some ways. But I see here on your chart here, you got DYDX, a solid move here. What's been going on there?
Yes, looking across altcoins, it was a bit of a mixed bag actually last week. So DYDX, obviously pretty solid move, up 39% in the week. So background to that is that DYDX insiders have been allocated roughly 50% of the entire token supply, so roughly 500 million tokens. And then 30% of these tokens were scheduled to get released this week, actually. Now, part of that, at least 83 million tokens, have now been delayed until December this year, which really helped, obviously, was a nice headline and helped create this positive momentum for for DYDX, but it's not really clear as to what the final number that will be delayed exactly is, and it's also pretty unclear as to how the exact unlock schedule will look. But certainly helped the coin perform pretty well over the last week. And one other thing I wanted to mention here is the other big theme that has been gaining traction is the ZK narrative. So zero knowledge related coins have been also doing quite well. So Mina is one example here. L1 that's using ZK technology, and then you had Polygon also with its upcoming ZK EVM mainnet launch. So effectively what they're trying to do with that is solve the problem of previous ZK rollups that weren't necessarily able to execute all operations necessary for smart contracts. So the solution that Polygon is working on there could be quite interesting. On the back of that, that was up around 7.5% as well.
Yeah, it's interesting, the ZK stuff. So we saw Han Ventures backing Sovereign Labs in a recent funding round. I still feel, and David, would love to bring you in here, I still feel like we're still trying to understand what that landscape looks like. And this year is going to be a really big year for ZK technologies in general, but it's unclear, I guess, who the winner or winners are going to be.
Yeah, so right now it seems like it's a three-horse race between ZK Sync, Scroll, and Polygon with their ZK EVM product. I would say that we have very little information still to go on with some of these projects. So it seems like Scroll could have some fairly interesting technology behind it, but we don't really have the evidence to kind of back that up yet. Overall, I would say markets are looking for some sort of like EVM equivalence, which is really kind of like the goal of these ZK EVMs, so that we could actually seamlessly kind of move a lot of these applications onto a layer 2 without having to kind of restructure the application in some way, shape, or form. This way, we could either have a transpiler that would actually natively kind of convert these things, so that from the developer point of view, they wouldn't really have to do much to kind of get that onto the layer 2. Plus, from the user point of view, it would be fairly seamless. So I think this would be a huge unlock for the ecosystem if it actually happens. Definitely the timeline of this has been brought forward. Like, we were expecting that this was going to be something only available a year, 2 years from now. But the fact that it's happening right now, the fact that this could be, we could have it sometime in 2023, is definitely probably one of the most impressive things about the development here.
Interesting. And so curious to your thoughts here. I mean, have you kind of been playing around with kind of many L2s and DeFi and any ZK technologies?
Yeah, I've tried out, ZK Sync just personally. Some of their development kind of workflow is pretty similar to other EVM chains, which is great for developers. I think the main unlock, at least the initial unlock as these kind of layer 2s release, is scalability, actually, rather than the ZK, the zero knowledge privacy component, because the structure of these rollups make it so that the throughput is significantly more than the current rollups that are out there, like Optimism and Arbitrum. So potentially we see much more high throughput apps or like order book dexes or things like that require high throughput that we've only seen on the likes of off-chain solutions like DYDX or chains like Solana happen in these rollups. So looking forward to that.
Yeah, it's interesting. And David, you mentioned three names that are kind of winning mindshare there. There's still many others that are kind of launching, working on the technology that kind of might start to gain some traction. I feel like it comes back to the old adage, like, you need people with use cases. You need people to actually use these things, and the teams that can combine both great tech and good BD potentially are the ones that win out in the longer term. But George, going back to your chart there, there's a couple of losers there. Lido, AXS, what's going on there?
Yeah, so I think Lido, we were obviously a little bit overbought, and maybe there was a little bit, too much hype. So that's coming out with these liquid staking derivatives. And actually, just one other point with regards to ZK rollups. If you look at, you mentioned obviously user numbers. And it does seem that, so I had a look at ZK Sync and Starkware also, and it did look a little bit like, we peaked there maybe in the first half of December, and actually user numbers have been going down. And the other question is how many of those are real users and how many of them are actually doing, something called airdrop farming, I guess. So just a couple of other things to consider, but XE is another interesting one. So we mentioned it in last week's call, obviously, and in that case, there was a big token unlock also, I think around $65 million about a week ago. And again, this is obviously not the main reason or the only reason probably why it has gone down 12.5% over the week. But I do think that, in this particular case, this unlock has certainly contributed to the price action that we've seen.
Yeah, and so one notable omission from your chart there is Aptos. Now that has just had an unbelievable move in the last week or so. I was reading a report, and apparently there was 500,000 monthly active users on Aptos, which was, I think it was from the Aptos team, so it's kind of tough to verify, and there's not a huge amount of infrastructure around that. Greg, I know you've been looking at perps. Like, curious to kind of hear some thoughts on that.
Yeah, got a lot of questions on Aptos last week. Token had quite the run, as you said. A few different reasons why. There have been some positive news reports, varied news reports, I should say. One was the token was integrated into another wallet, the Atomic wallet. Their NFT collection has been gaining momentum, and we know how explosive that can be for different chains. Binance also announced new liquidity pools on January 20th, and there were arbitrage opportunities on Asian exchanges that led to increased volume. So you can kind of pick whichever combination makes sense to you, but nevertheless, the token was up 90% plus last week. The interesting thing is that funding rates remained negative for most of the run-up, suggesting shorts were holding on and even piling in. Now, I checked this morning, those funding rates have actually turned slightly positive. So we may see a retracement in that token. And then on a side note, I hadn't had much experience with the Apto ecosystem. And given it was up so much, I felt like I should do some homework there. So a few of us bought an NFT. I'm not going to say which one, but I will say that the chain was very fast and easy to use. So I was delighted.
Yeah. That would be.
But what are we gonna do?
Yeah, the Aptos monkeys, an interesting collection. As people seem to be following on from punks and apes and everything else like that. I guess one thing that I think is interesting about Aptos, I was discussing with someone last night, is potentially VCs that are long the token are looking to hedge out their positions, which may be the reason why the funding rate has been negative for so long, given that, even with the price move higher. But obviously, in order to kind of lock in some of those profits, some of the funding rates you're going to pay over a period of time could get quite high. So yeah, we'll see how that continues to evolve. But there's certainly a lot of early investors that will be sitting on gains as the network hits sort of a fully diluted valuation close to 19 billion, with very limited kind of engagement or traction that people can see in applications, etc. Kind of looking to lock some of that in. I think the Bankless guys actually on their podcast, I'm sure many of you listened to it, they had an interesting stat up stating that if you looked at Aptos versus Ethereum on a TVL to market cap perspective, it was overvalued versus Ethereum by 53 times. So interesting one to keep an eye on there and see how that one evolves. Also, on the kind of the L1 side of things, looking at Canto, there seems to be quite a bit of pickup and interest on that. Has anyone been looking at that? Sid, have you seen kind of I know the TVL has grown significantly there, and it's an L1 on Cosmos. Curious to hear if you've got any thoughts there.
Yeah, it's been a little bit surprising to see the TVL grow so significantly, well past $100 million. Because it's a little bit of a challenge to bridge over into Canto and start using. It's not as seamless as some of the other bridges that we've seen, because it's running on a different architecture. It's on Cosmos, but the dynamics of it seem pretty interesting. They haven't really innovated per se on the tech side, but it's more on the ecosystem and how the chain evolves. So Yeah, we'll see. It will be interesting to see what kind of apps get built there. There's only a few dApps there right now, but if developers can think of novel applications to build on there.
Yeah. So I just looked up the stats now. I think they went from 66 million of TVO on Jan 1 to 137 million now. And DEX volumes were apparently $2 at the start of Jan. They're now up at 52 million. But I think along with that, the circulating supply has increased from 164 million to 424. So there's definitely been some inflation in the supply there. I was chatting with a project last week, and they were on Cosmos, and they were talking about the steps that you needed to take to bridge from Ethereum to use the platform. And it sounded like a lot. I feel like there's like a lot of work people need to do there to simplify those things. Otherwise, it's going to be really tough to get traction and move people over from Ethereum. So moving on to macro, David, over to you. We've got a really, really busy week. What are your views?
Yeah, you're right. It's a packed calendar right now. We have the Fed decision on Wednesday afternoon, who I think is what most people are paying attention to. But we've also got the Bank of England, the ECB on Thursday. We've got ISM, PMI data in the US, non-farm payrolls to end the week. And then on the earnings side, we have Apple, Google, Meta. They're all putting out earnings data after market closes. So, we have all of that. And on top of that, today is month end. Today being Tuesday, January 31st. So all of this, I think, really makes it very difficult to kind of trade the market at the moment. So far, what to expect? I would say jobs data has been fairly decent. Some of the sentiment indicators we've been getting, like in previous weeks, we've gotten the Empire manufacturing, we've got the Philly Fed indicators. The data there has been somewhat mixed. It's hard to kind of be sure what to expect there. I'm kind of curious what the PMI data actually has to say. I think so far we've been seeing people easing off of the soft landing trade as a result of some of the bad hard economic data that we've gotten. But this week, of course, as I kind of mentioned already, big stories of Fed. I'm pretty convinced that they're going to maintain their hawkish bias. I think that for the most part, markets already priced in the 25 basis point hike. So that's not really going to necessarily be a very big deal. But I think what's going to be important is whether the market actually ignores the forward guidance that the Fed kind of puts out, because what we know right now is that financial conditions have actually been coming in somewhat easier. And the Fed's reaction to that has been, okay, but actually, if anything, this might support our soft landing scenario. On the other hand, maybe we need to come in strong and hawkish in order to kind of move that back up. We're not really sure how they're really trying to interpret that financial conditions index at the moment. So overall, I would say market holding in fairly well, considering the expected earnings projections are going to be somewhat weaker across the board. But it seems like we're at the tail end of the hiking cycle, at least with the Fed. I think with regard to the ECB, they're going to press their advantage right now with the fact that the winter hasn't been quite as bad as what they were initially anticipating. And I think one last thing to kind of pay attention to is the debt ceiling, because we've definitely crossed that threshold. That debt ceiling was breached. And now that means that the Treasury can't issue any new debt until that limit is set. So until that limit gets set sometime, probably in June, because at the moment, extraordinary measures are being used to kind of meet the financial obligations for the US. I think until that point happens, markets could actually be relatively okay, because if demand here stays fairly flat, that means that rates are going to be anchored, because there's only so much debt that can actually continue being supplied on the secondary markets. So I think until we get into the end of the second quarter, then we could see things being really volatile, because if the economy starts to soften at that point and we don't have a debt ceiling limit kind of set, that's going to be the big problem. But that's all contingent on not getting any major negative surprises on the economic data.
So, Greg, I want to bring you in here. We've had a great run of late. We've got the Fed this week. Is the market pricing this to perfection, and do we have potential downside risk here?
Yeah, I think it is. The risk is certainly to the downside. I think if we're going to get 25 basis points tomorrow. That's been very well telegraphed. I think the press conference is going to be very important, and I just don't see how Powell doesn't try to use that to reset expectations. If you look at that chart that David had up, we're pricing in a good amount of rate cuts in the back half of this year. And I think what Jay Powell is going to try to do is flatten that curve a bit. So it looks maybe a bit more like the chart on the right, which is the ECB's. And if he does that, you'd expect risk assets to sell off. So I think there's a lot to be learned tomorrow. And until then, I do agree with David. Trading in front of this, unless you have a clear view, is probably ill-advised.
Yeah, that makes a ton of sense. Was always told never trade over earnings, never trade over kind of large data when you really have no edge. So maybe we've got some flat books out there. And so Greg, would love to stay with you there. So trade flows, if we move on to the next slide, what are we seeing on the desk?
Yeah, so volumes on exchange are still healthy and above levels that we were seeing late last year. And as we just talked about, the market's really going to hinge on what happens tomorrow. Positioning looks to be rather neutral. Basis is marginally positive, as are most funding rates. And that's what you'd expect in a balanced market, given there is a cost of capital, especially where rates are now. And we're also seeing 1 month option skew is back to flat from the more bullish positioning that we saw last week. So kind of any metric we look at, the crypto market seems to be pretty neutrally positioned. When we look at the charts, both BTC and ETH are no longer overbought, based on the RSI. And that'll allow for more upside if we do get a dovish surprise tomorrow. However, real support levels are a ways down from current pricing. So, as we just talked about, this is really a wait and see market. I'm going to wait, hear what Powell has to say, see how risk markets respond, and then act accordingly.
Are we seeing any particular client segments that are kind of typically like have high buy ratios or low buy ratios or anything like that as we kind of move
of course. Everyone wants to know what everyone else in the market is doing, which makes sense. John Maynard Keynes famously described markets as a beauty contest where you don't pick who you think is most beautiful. Rather you win by picking who everyone else thinks is most beautiful. So right now, traditional and crypto hedge funds still think crypto is beautiful. They're net buyers, as are traditional financial institutions. On the sell side, we have crypto VCs, and of course, the miners are still using this price action to sell into and hopefully repair their balance sheet.
That's great. Thanks so much, Greg. Actually, let's turn it over to Sid. Sid, can you talk a little bit about DeFi? I know you're looking at a couple of things here right now with respect to Cardano, Aave. Can you kind of talk a little bit about that?
Yeah, for sure. A few big points of news from the past week. One was Cardano, the network, suffered a brief outage where 50% of its nodes disconnected from the network on January 21st. And so developers are still investigating why that happened. And there's an active investigation underway, but it's a pretty significant number. So something to keep an eye on, whether this leads to further instability. But for now, service has resumed. Another interesting point of note, a news point came out was ratings agency Moody's is apparently developing a system to score around 20 stablecoins based on the quality of their reserves. So this is an interesting development because it's obviously an ongoing debate within crypto with USDT and then different flavors of decentralized stablecoins as to how reliable and how resilient they are, especially in the wake of what happened with UST and Luna. And we'll see how it develops. And related to stablecoins, another really interesting piece of news is the upcoming launch of the GHO stablecoin from Aave. So the Aave team obviously has one of the largest lending and borrowing markets in DeFi, and they're proposing to launch a stablecoin called Go, which will be basically backed by various types of crypto assets as collateral, where users can deposit crypto and then mint Go in return. And this will have an ongoing interest rate that's set by facilitators who are voted on by Aave governance. And then the stablecoin will be freely circulating. So it's a similar kind of model to what Maker does with DAI, but it's obviously backed by various mechanisms within the Aave protocol. So we'll see how it develops and whether it gains any traction.
It's interesting to see we continue to see different types of stable coins, and it's amazing to see Moody's taking a look at that. Greg, curious if you any thoughts on that specifically?
Yeah, I think this news is actually huge. Stable coins are, one of the parts of crypto that probably has the most utility right now. And seeing a traditional financial rating agency come into the market and really evaluate it is going to really help further adoption. So, I'm very happy to see this, and I'm excited to read the report when it comes out.
Yeah, I agree. I feel like it's one area that's kind of got like product market fit. Like we've got north of 100 yards of stable coins, and they use transactions, like tons of transactions every single day. So yeah, no, I agree. It's great to see some more kind of validation for the space there. Awesome. So Sid, anything else from a Web3 and DeFi perspective that's kind of caught your eye this week?
Nothing in particular. I mean, key themes to keep in mind, of course, is the upcoming Shanghai upgrade for Ethereum. They released a pretty big blog post with FAQs on exactly how the withdrawal processes work. So recommended reading for anyone who's interested. And then, this will obviously impact the entire liquid staking derivatives ecosystem. So another thing to keep in mind and keep an eye on, especially as pegs and liquidity will really drive how the market dynamics for these tokens work.
Yeah, I agree. Definitely feels like we're going to see a bit of volatility in a lot of those tokens over the next few weeks as we do launch those. Perfect. Well, that's a wrap for this week. Thank you, everybody, for your help, and thank you for those listening in. We will see you next week, and have a great week out there. Take care. All statements and analysis correspond to the date of this recording. This recording is only intended for sophisticated investors. This recording should not be copied, distributed, published, or reproduced in whole or in part. Neither Coinbase nor any of its affiliates make any representation or warranty as to the accuracy or completeness of the statements or any of the information contained in this recording. The views expressed in this recording are not necessarily those of Coinbase. Coinbase is not providing any financial, legal, accounting, or tax advice or recommendations. The receipt of this recording by any listener is not to be taken as a giving of investment advice by Coinbase to that listener.